In 2016, the biggest data leak in history exposed 11.5 million documents from a single Panamanian law firm. The Panama Papers revealed that world leaders, billionaires, celebrities, and criminals were hiding money through Panamanian shell companies. The Prime Minister of Iceland resigned. The Prime Minister of Pakistan was removed from office. Investigations launched across dozens of countries. The world was shocked. Panama was embarrassed. Reforms were promised. And then nothing changed. Today, Panama remains one of the world's premier destinations for hiding money. The same structures exposed in 2016 still operate. The same law firms still exist, some under new names. The same banks still ask few questions. The Panama Papers weren't a scandal that Panama recovered from, they were an advertisement. Because here's what most people don't understand. Panama isn't a country that happens to have a money laundering problem. Panama is a country that was designed, from its founding, to move money quietly across borders. The secrecy isn't a bug, it's the entire business model. This is the story of how a tiny nation became the world's washing machine, how the system actually works, and why it will never stop. 1. The original sin. To understand Panama, you need to understand how it was born. In 1903, Panama didn't exist as an independent country. It was a province of Colombia. The United States wanted to build a canal through the isthmus. Colombia said no, or at least demanded better terms. So, the United States did what the United States did in those days. They manufactured a revolution. American warships prevented Colombian troops from suppressing the uprising. Within days, Panama declared independence. Within weeks, the new nation signed a treaty giving the U.S. control of the Canal Zone. Panama was created as a service provider. Its founding purpose was to facilitate the movement of goods for foreign powers. The country's entire reason for existence was to be useful to international commerce. This origin story matters because it established a pattern. Panama's prosperity would always depend on serving foreign interests. The canal moved ships, the financial system would move money. The logic was the same. From the beginning, Panama understood its role: be the place where things pass through, and don't ask too many questions about what those things are. 2. The offshore architecture. Panama's financial secrecy system was built deliberately over decades. It didn't evolve accidentally, it was designed. The foundation is the anonymous corporation. Panama's corporate law, established in 1927, allows the creation of sociedades anónimas, corporations whose true owners don't need to be publicly disclosed. Bearer shares, physical certificates that confer ownership to whoever holds them, were legal until 2015 and still exist in practice. The law was explicitly modeled on American corporate structures, particularly Delaware, but Panama added features that went further in protecting anonymity. Directors can be nominees, people who lend their names but have no actual control. Shareholders can be other corporations, creating layers of ownership that are nearly impossible to trace. A single shell company can be registered in hours for a few $100s. On top of this corporate structure sits the banking system. Panama has over 70 banks, an absurd number for a country of 4 million people. Many are branches of international institutions, others are locally owned. All operate under banking secrecy laws that, despite reforms, still provide substantial protection. Panamanian banks are not required to automatically share information with foreign tax authorities. They're not part of the common reporting standard that most countries use to exchange financial information. Panama has signed some information sharing agreements, but implements them slowly and selectively. Then there's the Colón Free Trade Zone. This is the second largest free trade zone in the world, after Hong Kong. Goods flow through without customs inspection. Invoices can say anything. The opportunities for trade-based money laundering are endless. Put it together: anonymous corporations, secretive banks, and a free trade zone. It's a complete toolkit for moving money without leaving traces. 3. The law firm industry. The Panama Papers came from one law firm, Mossack Fonseca, but they were just one of dozens of firms providing the same services. These aren't law firms in the traditional sense, they're incorporation factories. Their business model is simple. A client, usually through an intermediary, wants a Panamanian company. The law firm creates one. They provide nominee directors, a registered address, and corporate documents. The client gets a legal entity disconnected from their name. The fees are modest, a few $1,000s to incorporate, a few hundred per year for maintenance. The volume makes up for the low margins. Mossack Fonseca alone had over 200,000 active companies when the leak occurred. The intermediaries are crucial. Law firms don't typically deal with end clients directly. They work through banks, wealth managers, and other law firms in places like Switzerland, London, and Miami. These intermediaries have the client relationships. Panama provides the infrastructure. This creates plausible deniability at every level. The Panamanian law firm says, "We don't know who the real owners are, we just incorporate companies." The intermediary says, "We're just connecting clients with service providers. It's not our job to police their activities." The bank says, "The account is held by a corporation. We did our due diligence on the corporation." Everyone has clean hands. The system works because no single actor has complete information by design. 4. The clients. Who uses Panamanian shell companies? The Panama Papers revealed a cross-section of global elites. Let's categorize them. Tax evaders. Wealthy individuals hiding assets from their home country tax authorities. This is probably the largest category by volume. A European millionaire puts money in a Panamanian company, which deposits it in a Panamanian bank or invests it elsewhere. The home country never knows. Corrupt officials. Politicians and government officials stealing from their countries. The Panamanian company receives bribes or embezzled funds. The official's name appears nowhere. Sanctions evaders. Companies and individuals doing business with sanctioned countries or entities. The Panamanian structure breaks the chain of visibility. Russian oligarchs, Iranian traders, North Korean front companies have all used Panama. Criminals. Drug traffickers, arms dealers, human traffickers. They need to turn cash into usable assets. Panamanian companies can own real estate, bank accounts, and other assets without revealing the criminal origin. Legitimate users. Yes, they exist. Multinational corporations use Panamanian holding companies for legitimate tax planning. People with assets in multiple countries use them for estate planning. These uses are legal, though the line between aggressive tax planning and evasion is blurry. The system doesn't distinguish. The law firm creating the company doesn't know if the client is a French dentist hiding money from taxes or a Mexican cartel laundering cocaine profits. They create the same structure either way. 5. The money flow. Let me walk you through how money actually moves through Panama. Say you're a corrupt official in an African country. You've taken $10 million in bribes from a construction company. The money is sitting in your cousin's bank account in Dubai. You need to clean it. Step 1. Your facilitator, probably a wealth manager in London or Geneva, contacts a Panamanian law firm. They create a company. Call it Global Trading Investments SA. You are not listed anywhere. Step 2. Global Trading Investments opens a bank account in Panama. The law firm provides the paperwork. The bank asks few questions. Step 3. The Dubai money is transferred to the Panama account as payment for consulting services from another anonymous company. The invoice is fabricated but looks legitimate. Step 4. Global Trading Investments buys an apartment in Miami. The property records show the Panamanian company as owner. Your name appears nowhere. Step 5. You have family visit Miami. They stay in your apartment. The rental income pays the condo fees and property taxes. You've converted bribes into real estate. Step 6. Years later, you sell the apartment. The proceeds go to your Panama account or to a new anonymous company in another jurisdiction. The money is clean. It has a documented history of legitimate investment. This is a simplified version. Real operations involve multiple jurisdictions, layers of companies, and deliberate complexity. But the basic mechanism is consistent. Break the chain between dirty money and the person who benefits. 6. The Colón Free Zone. The Colón Free Trade Zone deserves special attention because it's money laundering in physical form. Imagine a city-sized duty-free shop. Goods from all over the world arrive by ship. They're warehoused, repackaged, and re-exported, mostly to Latin America. The volume is enormous, over $10 billion in re-exports annually. The zone is designed for speed and minimal inspection. Goods flow through based on documentation. Physical checks are rare. This creates opportunities. Trade-based money laundering works like this. A Colombian drug trafficker has dollars in Colombia that need to move to China to buy precursor chemicals for more drugs. A Chinese manufacturer wants to sell goods to Latin America but struggles with payment logistics. Enter the Colón Free Zone. The Chinese manufacturer ships goods to Colón. A Panamanian company, controlled by the launderer, buys the goods. They pay the manufacturer from a Panamanian bank account. The goods are then sold to a Colombian importer at an inflated price. The Colombian pays in dollars, cash that the trafficker provides. The Panamanian company has now converted Colombian drug dollars into a legitimate payment to a Chinese manufacturer. The goods are real, the invoices exist, the money is clean. Variations of this scheme move billions of dollars annually through Panama. The free zone's design, minimal inspection, paper-based documentation, rapid throughput makes it almost impossible to detect. 7. The Panama Papers aftermath. When 11.5 million documents leaked in April 2016, Panama faced a crisis. The revelations were damaging. World leaders exposed. Celebrities embarrassed. The systemic nature of the secrecy industry revealed. Panama's government went through the motions. They appointed commissions, they promised reforms. They expressed outrage at the law firm that had embarrassed them. Some things changed. Bearer shares were formally immobilized. Owners now must register them with a custodian, though enforcement is questionable. Panama signed information exchange agreements with more countries. They joined the Multilateral Convention on Mutual Administrative Assistance in Tax Matters, though with reservations. The Financial Action Task Force, the global anti-money laundering body, kept Panama on monitoring lists. The pressure for compliance increased. Mossack Fonseca closed. The founding partners faced charges, though convictions have been limited. But the fundamental structure remained intact. Anonymous corporations still exist. Banking secrecy, while weakened, persists. The Colón Free Zone operates unchanged. Other law firms absorbed Mossack Fonseca's clients. The Panama Papers were a reputational hit. They were not an existential threat. Why? Because too many powerful people depend on the system, and because Panama's entire economic model depends on financial services. 8. The economic reality. Let's talk about why Panama won't change. Financial services represent somewhere between 7% and 10% of Panama's GDP directly, but the indirect effects are larger. The law firms, banks, and corporate service providers employ thousands of well-paid professionals. They buy houses, eat at restaurants, and send children to private schools. The multiplier effects ripple through the economy. The canal is Panama's largest single asset, but financial services are the largest private sector employer for educated Panamanians. What would happen if Panama truly cracked down on financial secrecy? The shell company business would move to other jurisdictions. The British Virgin Islands, Delaware, and various Caribbean nations offer similar services. Clients would leave. The banks would shrink. Without the secrecy advantage, why keep deposits in Panama instead of Miami or Zurich? The legal and accounting professionals would emigrate. They'd follow the business to wherever it landed. Panama would be left with the canal and tourism. The economy would contract. The professional class would hollow out. No government will choose this voluntarily. The costs are concentrated and immediate. The benefits, international respectability, good relations with regulators, are diffuse and long-term. So reforms are implemented minimally. Enough to avoid sanctions, not enough to threaten the business model. 9. The American complicity. Here's an uncomfortable truth. Panama's biggest enabler is the United States. American banks correspondent bank with Panamanian institutions. This means Panamanian banks can access the US dollar system, essential for any international financial center. American law firms work with Panamanian counterparts. The structures they create often involve Delaware corporations alongside Panamanian ones. American real estate, particularly in Miami, is a primary destination for money cleaned through Panama. The US doesn't require disclosure of beneficial ownership for real estate purchases. You can buy a $50 million condo in Miami through a Panamanian shell company, and no one asks who really owns it. Until 2024, the US didn't have a federal beneficial ownership registry. The Corporate Transparency Act changed this, but implementation is ongoing and exemptions are broad. The US criticizes Panama for secrecy while providing secrecy services of its own. Delaware, Nevada, and Wyoming incorporate anonymous companies. South Dakota trusts shelter assets from foreign tax authorities. Panama is a node in a global network, and America is a major hub in that same network. The focus on Panama is convenient. It's small, foreign, and Spanish-speaking. It can be criticized without implicating the powerful interests in New York and Miami that profit from the same system. 10. The human cost. Financial secrecy isn't victimless. Let's talk about who pays. Developing countries lose an estimated $500 billion annually to illicit financial flows. Money that should fund schools, hospitals, and infrastructure instead sits in offshore accounts. The corruption enabled by secrecy systems perpetuates poverty. Tax revenue lost to evasion in developed countries runs into trillions. This isn't just rich people keeping more money, it's public services unfunded, roads not built, teachers not hired. Democratic accountability erodes when the wealthy can hide assets. If leaders can steal and hide the proceeds, the incentive for honest governance disappears. Secrecy systems are democracy's enemy. Criminal enterprises thrive when they can launder profits. Drug trafficking, human trafficking, arms dealing, these depend on turning dirty money clean. Every dollar successfully laundered enables more crime. Panama isn't the only cause of these harms, but it's a crucial node. Remove Panama from the system and the flows would be disrupted. Other channels would emerge, but the friction would reduce the volume. The human cost is invisible to Panamanians. They see the law firm jobs and bank salaries. They don't see the stolen development funds in Nigeria or the cartel violence in Mexico. The benefits are local and visible. The costs are global and abstract. 11. The future of secrecy. Is change coming? The global pressure for transparency is increasing. The OECD pushes information exchange. The FATF threatens sanctions. The EU maintains blacklists and gray lists. Technology makes hiding money harder. Blockchain analysis can trace cryptocurrency. Big data can identify suspicious patterns. The friction is increasing. But the demand for secrecy doesn't disappear. Wealthy individuals still want to hide assets. Corrupt officials still need to steal. Criminals still need to launder. If Panama reformed completely, the business would move. Dubai is emerging as a new secrecy hub. Singapore offers discretion. Various small islands maintain offshore industries. The problem isn't Panama specifically. It's the global system that creates demand for these services and the major powers that could shut them down but don't. Panama will reform just enough to stay off the worst blacklists. They'll implement rules they don't enforce. They'll sign agreements they interpret narrowly. The form of compliance will exist without the substance. The washing machine will keep running, maybe a bit quieter, maybe with better cover, but running. Conclusion: the country that washes the world. Let's be clear about what Panama is. It's not a normal country that happens to have problematic financial services. It's a financial services operation that happens to have a country attached. The canal moves ships, the banks move money. Both are transit operations. Panama's prosperity depends on being the place where things pass through. This isn't a moral judgment on Panamanians. They didn't create global wealth inequality, corruption, or the drug trade. They built infrastructure to serve demands that originate elsewhere. But the infrastructure has consequences. Every dollar hidden from tax authorities is a dollar not spent on public goods. Every bribe laundered enables more corruption. Every drug profit cleaned enables more trafficking. Panama didn't cause these problems, but Panama makes them worse. The washing machine doesn't create the dirty laundry, but it makes sure the stains come out. The Panama Papers revealed the system to the world. The world expressed outrage. Then the world went back to using the system. Because ultimately, the powerful people who benefit from financial secrecy are the same people who would need to dismantle it. And they're not going to. So Panama continues. The ships pass through the canal. The money passes through the banks. The country fulfills its founding purpose, being useful to foreign powers who don't want to leave fingerprints. The world's washing machine keeps spinning. If this explanation helped you understand how global money actually moves, hit that subscribe button. Because the systems that hide wealth shape the world more than the systems we see. See you in the comments, and remember, when you can't find where the money went, Panama is usually a good place to start looking.